So this is small on the screen because there were a lot of words involved in describing each of these, and we did not want to shortchange those. Hopefully on the device that you're looking at, you can see the full item, and certainly that will be captured in its entirety on the back end for us as we look at the voting results. But look forward to seeing how you think the recommendations and the perspectives of those who have shared those today as we talk about secondary liquidity, how you would prioritize those and which ones you think need to be prioritized for action and improvement to improve capital formation.
Yes, and I did just look on my phone, Martha, to see, and I confirm that participants do see it in a much larger font than this slide. Than it appears on this slide. So it is a legible font. So much of our eyes are strained already by looking at computer screens and telephones that it's nice that the technology works with us here and does allow people to actually see it in a much more legible format. So, and thank you, Cass, for seeking to consolidate thoughts on 15C to 11. Her thoughts were to develop amendments 15C to 11 that would allow for public market for companies that make current information available and expert market for no information, other high risk, and permit the responsible use of shells for capital formation. So that's, you know, one attendee synthesis. Thank you, Cass, for weighing in.
All right.
And I believe David Lopez also weighed in with an additional thought on 15C to 11 on changing the requirement from review Section A information to ensuring the information is accurate. You can tell a lot of people who have a lot of experience, so we definitely appreciate your expertise and thoughts in this discussion. But it looks like we're kind of solidifying thoughts. Keep weighing in, but we will need to switch to the next issue shortly for discussion, which I believe is the proxy process. So be thinking about ideas and suggestions for the proxy process so that we can develop a recommendation on that. It looks like numbers are slowing-ish on weighing in, maybe a few more seconds, and then we'll probably need to switch to the next slide. So if you're in the middle of voting, please try and get your vote in as soon as you can so we can switch to the next slide.
Give it about 30 more seconds, and then we're switching slides, keeping things moving forward.
Okay, let's move on to proxy.
All right.
This is a topic we definitely heard a lot about in our first session or earlier sessions today. So look forward to hearing what folks have to say.
So it looks like the question's back up. Technology is always a fun challenge as we are in a fully virtual environment here today. So thank you for bearing with us as we work with technology and help collaborate and get your ideas into the recommendations.
Seeing some similar recommendations on requiring an asset manager to review proxy firm recommendations before any votes would be automatically cast. Also seeing some support for the proposed rules that the commission has put out. If someone wants to elaborate on which part of the rules you're hoping will finalize, that'd be helpful. Seeing a couple of different inputs on limiting or limiting robo voting. Got one on regulating proxy rating agencies and applying proxy solicitation rules to proxy ratings agencies. One person says finalize November 2019 rule on application of proxy solicitation rules to proxy firms. This issue seems to be one where folks have more consolidated thoughts, so that's helpful from a compilation perspective, if nothing else. I have another person saying finalize proposed rules on issuer review of proxy advisor reports. Jessica, when you get a chance, yeah, thank you. Scroll down a little so folks can see. Apply the proxy solicitation rules to proxy firms as in the rule proposal and to proxy ratings agencies. And this is a common theme that we've heard from, not just today, but other times, allow issuer to review and give feedback on proxy firm recommendations. There's one requiring asset manager to solicit proxy input from asset owners. Encourage engagement with issuers. I'm assuming that means of the proxy firm, proxy advisory firm engagement with issuer, but if I'm incorrect on that, let us know. All right, we'll try to wrap this up pretty soon here. You mute so you don't have to hear me typing. I love all of the above. Another, address automatic vote submissions, and regulating proxy firm conflicts of interest. So we're getting all these put into Inventometer. I was pleased to see some of the chats earlier liking this approach of collaborating. It's definitely, I think it's great in terms of, I've been at a number of forums in past years where folks come in person And obviously, I don't think anything can ever replicate that in person, the benefit of being in person. But I have to say, I do love that we can have a meeting at the same time, and everyone being heard at the same time. I think is really it's a wonderful development as far as I'm concerned. So we are getting these ready to put into Menti and should have you ready to vote shortly.
Excellent. I agree, Julie. Great. And often get at our forum. So, we're getting a little bit of background noise. One phone for us. And I am going to mute and close out so that I can go and fix some of the tech on the back end to make sure that we're getting these recommendations uploaded. Julie, thanks for keeping things running and on the track.
Yeah. We're trying to input everything into one place, and anyone who's worked with technology knows that sometimes that works really well, and sometimes not so much. But we're getting close. So be thinking, our next step we'll go through scale disclosure, and I know we're getting close to the end of our time, so be thinking about issues that you're going to want to identify for scale disclosure. It's definitely an issue that we heard about this, I keep wanting to say this morning, but earlier this afternoon we had some really great, in my opinion, panelists from smaller reporting companies talking about how they put those into action, and also from our folks talking about the path to IPO, and when those scale disclosures can really, just thinking forward to being a public company, how those may weigh into the thought process. So to the extent you heard something earlier today, or you have experience on your own, where you think it's, maybe you're an investor who finds that you want more disclosure, or maybe you're a company who finds that you don't think that that certain disclosure is more burdensome than others, we really welcome that feedback. All right. If anyone is just joining us, I noticed some movement over here on the attendee list. We're using this voting technology from Menti.com. You can see at the top of your screen the code. If you go into Menti.com, you can give us your input. So it seems like folks are able to get in and use it pretty well, but if you have any questions, or if you're having any issues getting in with the technology, you can chat to us, or you can email us at smallbusiness.sec.gov, and we'll try to help. And so we already have some votes coming in here. So far, as Martha pointed out, the horse race, regulating proxy agencies, including conflicts of interest, off to a quick lead, but then rapidly coming up, we have requiring asset manager review of proxy firm recommendations before votes are automatically cast, which is also referred to as robo-voting. And then support for adopting proposals from the commission that they put out in August and November of 2019, including rules for issuer review of proxy advisor reports. We'll give folks a little time to vote. And again, be thinking about what you want to talk about for scale disclosure once you've weighed in on this one. All right, we'll give a couple more seconds here, see if that vote tally inches up at all, and then I think we've got our top three. Oh, there's still some coming in. But we're going to run out of time, so I think that we should go ahead and move on. So if you haven't gotten in your vote, do so pretty quick here. And I see Martha's finishing the snacks that we've all been enjoying today.
Yeah. I don't think there's anybody at that new level during quarantining and working from home. I know that I certainly have. Okay, so the next is scale disclosure. So this is looking at what we often hear referred to as the one size does not fit all. It applies equally with T-shirts and with disclosures for public companies. And so this is looking at where changes are needed. A number of you flagged scale disclosure or elements around scale disclosure as an important issue. So what we want you to do here is to flag specific issues that need to be better scaled. So these would be public company disclosures to investors that need to be more appropriately scaled and figuring out what nature of those disclosures is needed. So think very strategically on this one and try to help us come up with some categories and areas. I know that this is an area where the Commission has recently taken action, trying to more appropriately scale the types of disclosures that are required of companies. But want to make sure that we're continuing to take a fresh look and understanding where the market thinks that disclosures need to be further scaled. So looking forward, I see EGC status expiration during COVID-19. Excellent feedback there. You know, EGCs do have a number of, those are emerging growth companies. That is a byproduct of the Jobs Act. And looking at emerging growth companies, they have a number of different accommodations, including scale disclosures that are intended to help those companies who are newly public. So that's the back end to help those. Anybody who's writing it about XBRL is obviously steeped in disclosures with the SEC and knows that quite well. So it's appreciate the feedback there and looking forward to some of the additional comments coming in.
Would be curious to hear if folks have further input on the EGC status expiration, if you're thinking of it from a time as EGC or from a, you know, going over the size limitations or the size expiration. If you have anything to say on that, we'd welcome it. Someone writing in about the revenue test superseding the public float test. And if you can elaborate maybe in the chat on that, are you talking about EGC, SRC status maybe, or I'm sorry, and I'm talking in acronyms here, but SRC for smaller reporting companies, the Commission recently amended that definition, so to add in a revenue test. So I'm guessing that's what you're talking about, but if that's not correct, please let us know. So here we go. We have a chat from Charles Crane saying, regarding the EGC expiration, our thought would be that if a company's status would expire for any reason, time, size, et cetera, during COVID, their graduation would just be delayed for a year. So thank you, Charles. That's helpful. definitely a common theme here about extending the graduation. I like Charles's comment there on that, the graduation from EGC status during the COVID-19 public health emergency. So try to get any comments in. We'll start compiling them into Menti. Definitely know that as we get to the end of the day, at least in my house where I have kids, you hit the witching hour and people start to get hungry and cranky, and sometimes that's my kids, more often it's me. So definitely want to try to stay on time to the extent we can, so going to push us along here. Oh, we have another.
Have my
Sorry.
What was that? From the 12 o'clock, approaching 5 o'clock. Thanks for folks that are adding in additional thoughts here.
And again, on kind of echoing Julie's question on the revenue test superseding the public float test, I know both the smaller reporting company definition as well as the accelerated filer definition both have a revenue test and a public float test. I'm not sure if that's kind of what you're getting to, but I'm not sure what the suggestion means regarding kind of the revenue test superseding the public float test. Are you suggesting potentially eliminate a public float test? If the person who weighed in there, they could respond in the chat, or if they, yes, or submit a new Mentimeter that helps explain kind of what they're really driving at there. I think it'd be helpful to have a little bit more clarity on that point.
And Dan Zinn has a very thoughtful comment in the comments. If folks want to take a look about his thoughts on scale disclosure being a bridge for the gap, or the idea of scale disclosure bridging the gap between providing investors with current company disclosure and overburdening those companies to the point that they shun the public markets. And he points out that's where, and his company, I'm sure you saw that's where he's from, where the OTCQX and OTCQB markets that support streamlined disclosure in line with Rule 15C211 state law and common sense corporate governance can provide the benefits of a public market. He's pointing out that Brian Levy from our earlier panel pointed that out, and without the cost and complexity, as well stated, he says, by Stephen Graham earlier, of an exchange. So Dan, thank you for that. We appreciate this. I know some of these areas are dense, and you know, you have to be a securities lawyer to understand some of them, and you know, not everyone who works in public companies and you know is weighing in on these issues is, and so we're trying to you know, toe the line between getting into the weeds, which you need to do because they're very important, and trying to make it accessible for those who are not in the weeds. So my mom said she would tune in, and then she said, no, actually, I'm not going to tune in today because it's going to be too in the weeds for me. So I'm sympathetic without question, but some of these things you really do have to get into the nitty gritty in order to understand what differences these changes can make.
Absolutely. All right. And it looks like we're about to show some of these sub-issues as opportunities for you to weigh in and give your feedback on which ones you think need to be prioritized within the broader category of scale disclosure. So use Menti and weigh in right now and share feedback.
And next up is quarterly reporting. So just as you're voting, be simultaneously thinking about kind of what sub-issues you want to think about with regard to quarterly reporting.
And this is one that I think we heard Marianne Scully tease this out a little bit in the Small Cap Today panel earlier. And the SEC has previously hosted an event on this topic looking at long-termism versus short-termism, which is what Vinny had referred to here with quarterly reporting versus, as I think Marianne started going into, biannual reporting. But start thinking about exactly what the sub-issues are and opportunities for recommendations there, what you think is appropriate. I think that's a pretty niche, that topic gets into a pretty narrow area, so hopefully that will be one that we can move through pretty quickly, and then we will head into our final topic, which is depositing securities, which gets into all kinds of weeds. We're going to hopefully stay surface level of the graph, not down deep within it, to borrow a lovely weeds analogy, which I don't even know if that analogy works, but we're going to go with it now because my microphone is unmuted, and that's where we are at this point in the afternoon. I have a feeling that our whole team is rolling their eyes because I am adept at terrible analogies and bad jokes, and today
We're used
is
to it.
Everybody else is getting to experience it now, Julie. Wonderful. We've gotten some great feedback here. We're going to give you about 30 more seconds to weigh in, so make sure that you are hitting submit on your vote so that we can make sure that those are tallied, and then we are going to move into quarterly reporting, and we are going to wrap the session. I know that we committed to have this done and for me to give closing notes at 5:15. I will give a spoiler alert. My closing remarks are about 2 to 3 sentences long, expressing gratitude and appreciation for you being here today. But we are going to, so that we don't cut off the important issues that you have flagged that you wanted to make sure that we got through today. I don't want us to cut off the conversation. So appreciate everybody sticking with us for a couple of minutes that we'll run over to make sure we have a chance for you to weigh in on those issues, because we have gotten through quite a lot of ground. We have covered since 2:45. We have covered everything from crowdfunding to accredited investor to proxy process to secondary liquidity, both in the public markets and the private markets, and many other issues. Those are topics that when the SEC is tackling what to do with those, take a long time. And if you were trying to write a comment letter into the SEC, which I encourage you to do if you have additional thoughts and feedback that goes into more detail, we love people that get in the weeds. This forum doesn't give the best opportunity to do that just by nature of the collaborative venue that we have. Let's go ahead and switch from these results, though, right now into the quarterly reporting items. So thank you all for voting here. And while you're adding in ideas on quarterly reporting, I wanted to highlight a couple of things related to commenting. And not just commenting like the comment section of an article or commenting in the chat, but for those who are new to the comment process, I want to just share briefly how easy it is to share feedback with the commission and how important it is. So the comment process is really the way that we as regulators engage with the public and make sure that the rules that we are putting out there make sense and that they match the market's needs. And so we put out proposals and we solicit comments. So we are actively requesting you to weigh in with ideas, like we're requesting you to weigh in right now on quarterly reporting, although in a little bit of a different medium. But with those, I think there's a lot of people that think, oh, well, I might not be an appropriate person to weigh in here, or my feedback, maybe they don't care to hear it. And that's the absolute opposite of true. We love hearing feedback from lots of different people. Actually, the more people that weigh in and bring different perspectives, the better outcome we have, particularly when we bring in diversity of perspectives. And so that's something that we have been really engaged with, helping people demystify what that process looks like. And we have a video out there about just what it means to comment, how you can do it. It is as easy as actually sending an email to the SEC that we can submit to the comment file. You can certainly put together a long PDF with a lot of different footnotes and citations and make it lawyerly and collaborative, or you can make it something that is bullet points that you send in that says exactly, you know, here's how this would affect my business, or this is how it would affect me as an investor, and we would love to hear it. So looking at some of the feedback that we are receiving, it looks like we're hearing some folks that are looking at potentially ending quarterly reporting to discourage short-termism, in other words, to encourage people to hold companies with a longer view, or to provide flexibility, and looking at scaling and which companies have the ability to choose what kind of reporting framework that they are in. So thanks, and keep that feedback continuing.
And I just want to jump in on what Martha was saying about comment letters. Jenny and I can speak to that, as we both worked on rules here at the SEC. both from the rule writing perspective and then from other angles. And the comment letters are really, really very helpful. The commissioners take them very seriously. The staff takes them very seriously. And Martha mentioned those really long, detailed comment letters. We love those. Those are helpful. They get into the weeds that we're talking about and help us flesh out the issues and hear what folks are thinking. But just as valued are those from companies and investors who just tell us their particular experience. It doesn't need to be long and footnoted. It can be a simple email. But sometimes it's those perspectives from smaller companies that we don't get a lot of, and we really do want to get those and encourage folks to write in on any experiences you have, because it's really valuable to us as we're when we're writing rules and trying to figure out what changes may be helpful. So some of the comments we're getting here, I'm sure folks can, hopefully you can see them on your screen, but we have, shorter form for quarterly reporting, mirroring the Reg A, twice annual reporting periods. The idea of eliminating the 10Q form and filing, the content of the earnings release or the earnings call if one is done. And, some folks, one here says move away from 10Qs for all issuers, and that 8Ks could suffice. I think it's moved up on the screen now, but, allowing companies the option of how often to file their disclosure was one I saw earlier. Yeah, reporting frequency. Comment of eliminating the stock repurchases requirement or disclosure. I'm going to comment on that. I think we're wrapping this up. If you have anything else, let us know in the next, let's say, 30 seconds, and then I think we'll be ready to go. This is great. We just got another couple inputs, which I appreciate. Jessica, can you scroll back down? I just want to make sure that those get heard. We have someone saying quarterly reporting is very important. Don't eliminate them. We have another one saying require companies to furnish all non-material CSR, which is corporate reporting, not necessarily currently done on EDGAR, like sustainability reports, investor presentations, bank and bond agreements, and asking that those be filed via EDGAR.
And I think that this really goes towards hearing from a lot of people who have perspectives. So I think it's great that we have perspectives across the board, and ultimately that helps us to try to find the right balance between getting information out there that investors want to hear from and in the format that investors want to see it, and then also balancing the perspective of other marketplace participants, including issuers. And so I appreciate everybody's feedback that is shared today as we look to facilitate a really open conversation that engages lots of different perspectives. So right now, what we're doing is we are incorporating in the feedback that you guys have submitted, and we're putting that into the lovely tool that by now you should be very familiar with. It should be old hat for how to go about prioritizing and giving preference to the specific categories of sub-issues that have been identified related to quarterly reporting. And then we will move into our final session on depositing securities. That's the final issue for today. So appreciate those who are continuing to weigh in with thoughts on that one. I have a feeling that for those who voted on depositing securities as one of their top issues, you'll have lots of feedback for us with great specificity of what you're looking to see and how those opportunities for depositing can be improved. So looking forward to hearing from you in just a little bit. Of sub-issues that have been
while we're waiting, I just have to comment as my comment earlier about, oh, here we go. opportunity to weigh in.
And as you're weighing in, as Martha mentioned, just keep in mind kind of the issues that you want to talk about for depositing securities, because that's, again, the next issue that's up. So prioritize this and then think immediately kind of on how you want to think about and then what you want to include in the recommendation for depositing securities. In some ways, I feel like we're waiting for the ball to drop on New Year's Eve and just trying to be the commentators, keeping the discussion going. So I hope you all are with us here, and thank you for hanging in.
I was feeling like the pledge drive. You really just talk and talk and have to fill all the space. No, this is great. We're getting some votes. While people are voting, I was just going to comment. This is the first day that folks from our team have been in the office since March, and the SEC went to a telework status the beginning of COVID, and I think it's gone, from my perspective, gone really well. I think folks our telework capabilities were really strong and been really appreciative of that. Hopefully you haven't noticed, those of you listening haven't noticed any difference in level of service. I know it's a very trying time for a lot of companies and businesses, and I think we've all felt lucky to have an agency that's supportive of us, able to work wherever we can and keep doing our jobs. Absolutely. It has been strange to be in the office today. Very eerie when you first walk in.
Well, so let's give another maybe 30 seconds or so for you to vote, and then we're going to move on into our last topic. So let's make sure that you get those votes in. We want to make sure that we hear from you, and then we will switch into depositing securities as our finale for today's forum collaborative policy discussion. All right. So here you go. It's now open. So share the specific ideas and things that you think need to be changed around depositing securities. So the floor is open and minty.
All right, we're starting to get the early submissions in. We have issue updated guidance that enables broker-dealers to safely process transactions in OTC securities and better understand their obligations with respect to lower price securities. Well, someone has said, for non-SEC reporting issuers require pre-publication of Form 144s on the market where the security trades, so broker-dealers can facilitate secondary transactions under Rule 144C2. We have reduced regulatory requirements for depositing shares of SEC registrants who are current in their reporting obligations versus shares of non-SEC registrants. Modernized transfer agent regulations to increase the amount of information on the issuance, ownership, and transfer history of shares available to broker-dealers and investors. Provide a reasonable inquiry exception to BDs that accept deposits in securities of less than $25,000 in value for non-affiliates. Examine the impact of the NSCC's proposed amendments to the definition of illiquid security on retail investors and small companies, as increased fees may make it more difficult for these companies to source liquidity. Jessica, when you can, you could scroll down so we can see the next topics coming in. Thank you. Require public submissions of Form 15C211 submission by broker-dealers. And if anyone would like to give us a quick verbal explanation of any of these or elaboration, that might be helpful as folks prepare to vote. Some of these are not issues that folks deal with every day. Those who do deal with them every day and know them well. And so we'd welcome hearing from you to help those listening and voting to make a more educated response. Someone says, keep bar as high as practicable to prevent fraudulent activity. Oh, I see Cass Sanford would be happy to speak. Nick, can you promote Cass? We'll keep it quick because I know I've gotten some private chats saying, yes, I am in that witching hour in my house or for myself, but we'd love to have you, Cass, if you want to speak a little bit about some of the recommendations that you're making. I see you. Gotta get some audio. If you hover your mouse over the bottom of the screen, you should get a phone icon that allows you to connect. Yeah, excellent.
I think I'm on. Well, thank you guys very much, and I will be sure to keep brief. The afternoon sun's coming in through the window, so you may not even be able to see me. But we kind of hear about these clearing and depositing issues as the market operator with respect to a lot of lower price and thinly traded securities. We hear from investors, from companies, from broker dealers about their issues, and a lot of them circle around two major issues, which is one, broker dealers and clearing firms kind of concern around regulatory guidance and their inability to know exactly what is a safe way to process transactions in these types of securities. So they will actually end up just either requiring large fees in order to process transactions in securities under $5 or that are maybe thinly traded, or just exit the business altogether because it's not worth the regulatory risk. So a lot of our recommendations in order to improve this process are related to increasing the disclosure obligations on transfer agents and just adopting additional guidance. One, increasing the disclosure obligations on transfer agents will allow broker-dealers to have a better insight into the chain of custody of where a security goes from issuance all the way through secondary transaction. And that can allow them to safely process and understand when securities are being held by insiders, affiliates, controlling shareholders. Another issue is for non-SEC reporting companies, there is a pathway for them to have their securities transactions processed under Rule 144 or C2. There's a couple of informational requirements that are held up through the manner in which Form 144s are actually published to market and made available. They're actually only made available after the insider needs to publish them. So when the broker-dealer is looking for information on the transaction, they're not able to get that information. happy to provide more information on the details of that one without going too far into the weeds, but some additional guidance there would be helpful. And then finally, there is a NFPC proposal related to the definition of illicit securities. And we're concerned at this point that that definition might actually just further serve to further increase the fees for transactions in lower priced and thinly traded securities, which would ultimately make it more difficult to process trades and to make these securities less liquid. So some context around some of our recommendations. Happy to provide more information here, but this is a big issue that we see all the time, and it's something that's going to require a lot of changes to the very detailed plumbing of how our securities markets work.
Thank you. That's really helpful.
No problem. Thank you, guys. This has been very fun.
Well, good.
I'm glad that
Clearly a security fund.
fun that and that many of us do. So I share this feedback. And Cass, it's good to see you virtually. We're getting feedback, everything shared, incorporated into for everyone to vote on prioritization. And then with that, that will wrap the last thing that you need to do today in Menti. So appreciate you taking the time to weigh in, add your additional thoughts and perspectives here, and to help us with the prioritization of this. Just incredibly grateful for those who are still with us. I know that we are 18 minutes over the time period that we had set for closing this out, but it is important that we give a chance to hear from you on all of these different topics and to make sure that we weren't shortchanging any one discussion in the name of strict adherence to the schedule, as much as that is my personal nature and general preference. Once the schedule has been decided on, to really dig in and stick to it. It's important that this be about the inclusive opportunities to hear from each of you and for you to have the chance to weigh in. It again gives of this forum and what a unique venue this provides for you to impact policy and to be directly involved. Again, just to recap, we're going to be taking as a team all of these policy recommendations and ideas that have been shared today. We'll be synthesizing those into a report that will ultimately be delivered to the Commission and Congress. So we'll include the feedback that you have brought to bear. So thank you very much for taking the time to bring these issues from across the board, from micro offerings of the smallest dollar amount to large IPOs and big capital raising transactions to bear. All of them fall within the umbrella of what we look at in our office as small business, which spans broader than any definition of small business you've probably ever used, because we start from startup, we go across the entirety of the private market space, and then we also look at smaller public companies. They all matter to us. We don't view them as a continuum of pipeline that every company will wind up passing through each stage, nor using every different type of exemption, but that instead we need to have really good tools that work for all of those businesses and meet them where they are. So looks like we've gotten some really good feedback that's weighing in here. We're going to keep that open for another 30 or so seconds as that is being shared. And what I will go ahead and do is to wrap us up while those last votes are coming in, and just wrap up and conclude our 2020 forum. So thank you again to all of our participants, speakers, our wonderful tech support team, and our colleagues across the Commission for making today a success. I really appreciate you spending time with us and taking your passion for capital formation and putting it into action. The final forum report will be posted on the forum website in the coming weeks and months, and a copy will be sent to Congress and the Commission. So the feedback that you provided today is not just shared with those who are here, but it's going to be heard much more broadly. And registered participants will receive an electronic copy of that report when it is available. Thank you all, and I hope that you have a wonderful evening.